Hello guys, welcome to the Trend Parrot. Yesterday we nailed our call for a breakout, but as you can see right now we are seeing resistance on this trend line. We made it all the way to 55.5. We still have lots of upside that we haven't taken yet, and in today's video I want to talk about what needs to happen with the CME gap that we built over the weekend to still be able to get to those top levels, starting with this order block at 57 and the 60Ks. I'm also gonna cover what happened on the weekly time frame with the candle close yesterday. Of course, we will continue looking at the liquidity, which has been a major insight for us to understand the moves of this market. If you didn't watch the video I published on Sunday, it's a must that you watch it as well. Don't miss the call I made for Ethereum, and it's also going to help you understand why are we in a long today. I am also going to cover at the end of the video what I'm thinking about the DXY, the volatility index with this close above the trend line. I'll cover the Russel, the NASDAQ, the S&P, and even gold, followed by the top 7 tech stocks and what I'm expecting from them market open this week. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And thanks so much for all the likes over the weekend. Once again, we made it to over 100 likes. I am hoping that we can continue getting over 100 in every single video, along with all the nice comments that you're leaving below. That's really helping the channel. Let's start quickly with the 4-hour time frame. This is the time frame that currently is experiencing the breakout. Looking at this closely, we can see that at 22 hours on Sunday, we confirm the first candle breaking out above the trend line on the RSI 4-hour. We continue going higher beginning of Monday, and we're still pointing up. Now it's 10 a.m. UTC. We talk about a potential target of 71. That's the most aggressive target for this breakout. We took note of the double bottom formation in here. And if we were now to come back down, potentially to take out the CME gap, my first point of concern at the moment is if we touch an RSI of 39 and then we continue going higher, do we take at this point the CME gap? Let's have a very quick look at that. RSI 39, if we look closely at the price action, 39 on the 4-hour will take us somewhere around 53.8K. Very close to this bounce that we have here, just $100 higher. Let's have a look at the CME gap. It starts from 54.5 and it spans up until $54 and $75. That is the gap in the 4-hour time frame. We can decrease this to 1-hour time frame to see if it's a larger one, and it goes to 53.9K. And if we were to drop to the 15-minute time frame, we can get to 53.5. Most of the people look into CME gaps on the 4-hour, some of them in the 1-hour. I don't know many people that look at this in the 15-minute, but I've seen today some people claiming that the CME gap is 3%. For example, this account here includes the body of the candle in the CME. I will say that the effect of the CME gap should be perceived between 54.5 and 53.9. So if we were to do something like this on the RSI to come back for a retest, we will see in the price action a rejection from the price trend line coming into 53.8, and at that point is where we do want to see the actual breakout to the upside and continuation to retest the CPR levels. That is assuming that we do not break below this line. If we do that, I will expect the bleeding to continue in this way towards the lower end of the chart. It's worth noting that when you lose the CPR pivots in the month and a new month starts, sometimes you rally into the CPR pivots just to see a rejection, like we can see in here on the 1st of July, and you can also see it in August. This rally that goes into the pivots manages to get to the second one, and then it sees a rejection from there. We are in the month of September, crossing back below. Potentially, this small rally could get stopped somewhere in the CPR levels. If we see rejection from here, I will expect that that's another confirmation to start finding new lows below the 50s. But if we were to break the 60K and manage to conquer these two order blocks in here, then our next target could be somewhere around the 65K. It's worth noting that in September, the first level of resistance coming from the CPR monthly is located almost at 67K, which is a huge cluster of liquidity. I'm not sure at what timing we could get there, and it will depend very strongly on what news we get when it comes to the interest rate cuts in mid-September and how investors perceive that, whether it's a 50 or a 25 basis points. We will have to continue monitoring the general markets. You know what is my game. I bought around 59, I bought 57.1, and I bought 53.5. And I'm still waiting for a leg up. This as a swing trade. If I see big weakness, I might end up selling it if I perceive that's the best thing to do. Opposite to what I mentioned before, that this is my accumulation into a potential breakout at the top of the megaphone pattern. It all depends on how we react to the bull market support band in here, whether it becomes once again resistance. The bull market support band currently is located between 60K and 62.7, and the top of the megaphone pattern currently is at 69K. I want to give you an update as well on the daily. I mentioned earlier on Twitter that we closed down the daily precisely at the resistance. That's the candle close of Sunday, and the candle of Monday, which is in progress. Obviously, it's currently sitting above the resistance. But be very careful, because our rejection right now will move this candle back below the resistance and potentially going for this plan of taking the lows at 27.28, as I mentioned yesterday. Make sure that you watch the video I published on Sunday. It will really help you understand how I'm planning to approach a potential rejection here. If you look at the RSI, if this was to become the actual breakout on the daily, it will leave behind all this leg in here that we already have in here on the 24th of June, followed by the 5th of August. It is possible to break out in here and go for the top of the range, but if we do that, I will see that as part of the typical behavior within September, which is to have a rally mid-September, but without exiting the box, like you can see in here, in 2021, in 2020. And guys, another thing I want to share with you is that once again, the signal coming from the global longs and shorts accounts on Binance is about to print a buy. And I know many of you must be getting frustrated with so many buy signals coming from this. The signal comes from the longs finally crossing below 70. It really helps to have extreme fear on this side and to have negative funding rates. That's also complementing and making the signal stronger. When looking at the previous Septembers, seeing a similar picture, but be mindful because the breakout might not be as exciting as you are expecting. Look at this price action in September and a rally into October. Things look pretty flat with very negative funding rates, people shorting. We see a similar picture in here, so do not expect necessarily immediately to see a push at the top. That can still happen, of course, but it's lower likelihood, and I will expect a little bit of more sideways in this box and bearishness before we get the actual final signal to exit this box. We have 8 consecutive signals in here, and so far here we have 1, 2, 3, 4, and this is the 5th one. On fire charts, something interesting is happening. You can see that this 9 million in here got removed at 56K as the price is approaching it, and instead of that we are getting some support with 12 million at 53.6. That is the price that closes the CME gap. So keep an eye on these people that potentially might be following with our plan of a potential dump to close the gap. You can see that there's been 51 million of bid liquidity, and although that's declining, the price is going upwards, a very small move up. In fact, to me it looks like a bear flag, and that's why I keep telling you on Twitter, be very careful with this move up. We have a CME gap below, we are in a downtrend on the daily, and the 4-hour time frame breakout anytime can betray us. And yes, it is nice to do some swing trading. That is the level of risk I'm willing to take in these areas. Take some of the liquidity and then see how we do. We have some liquidity at 53K, some at 54.2, and on the top end, this one at 57.3 is quite large, followed by 58.2. The price doesn't have a lot more to do at the moment in terms of fair value gaps, apart from taking the liquidity to the upside or having a very quick move to take liquidity from the downside, starting from 47K. So keep a very close eye on this move on the 4-hour. It can be very rewarding to enter in here if we were to make a move to trap most of this liquidity, but the risk is also quite high since there's almost no caution in this area in here. And we can very easily see what we did on Sunday. You can see that from 4 p.m. we started chasing the shorts. We hit those ones in there at 10 p.m. UTC, and now we continue to punish more shorts. It's very frequent that we leave some behind without taking it, so don't assume we have to go to 56 just because you see liquidity there in the screen. Sometimes it could happen that it just gets halfway to there and then it goes straight into the liquidity below us, which we can see there is some at 54 and there's some red one at 53.5, which is more substantial. Zooming out a little bit, on the top end, the largest liquidity is 60K, followed by 58.6. That hasn't changed. Everything else around here is mild, and focusing on the lower end of the price, we got 52K, and then the usual 48 to 46, which is the largest right now, still standing. And on the weekly time frame, we did close with a lower low on the RSI. You can see that we made it to 44, whereas the previous low was at around 45 to 46. So definitely 1 point lower. This line that I'm plotting in here is kind of my wish, not necessarily my forecast. Eventually, we're gonna break this line of resistance, sure, but whether this market can continue staying as a bull market, that is subject to where we cross this line. If we do it from below 40, we have never managed to survive that in a bull market with the exception of COVID. If we do it from where we are right now, basically in the upcoming 1 to 2 weeks, then I think we got a pretty good chance of continuing with the bull market. Worth noticing that the MACD is starting to curve up, showing some pink colors in here, which means that the momentum to the downside around this area it's slowing down, and that is confirmed by volume, which is getting to minus 19% on the oscillator. I'm gonna give you here a counter example. We got some pink, we got the volume down, we push back up, but then we have another leg. So be mindful that that is good to see, but sometimes not enough. I'm making this video quite early in the morning. I still cannot see the market open, but on Friday, we print another green candle on the dollar index, pushing towards our target of a potential resistance at around $102. What we need in October is to see a rejection around there, pushing back towards $100 and hopefully breaking down. VIX closed in a very spooky area. I don't like seeing this VIX breaking above it once again, just like we saw on the 29th of July, because right after that, you can easily see another spike of huge volatility, which the last time that happened, we made a movement of minus 15%. The NASDAQ closed on Friday below the trend line once again, and the S&P is halfway through completing this double top, that if we manage to complete it at 5,100, then the target breaking below that is 4.6K, a confluence of this trend line with this level of resistance from 2021. It is likely but not guaranteed. I think this is just reflecting the fear that there is right now in the market of a potential recession. And you know, there are people thinking recession is coming, people thinking recession is already here, and people thinking recession won't come, the Fed won't let that happen. And that current indecision is helping to build this path. Another thing that I would like to see is a breakdown of the gold, currently holding on this trend line on the RSI. I love these setups. If we were able to break down from here and retest it as resistance and coming back down, that will give us more confidence that people are actually willing to move their assets from the safety of gold into risk-on assets. A confirmation of that could become visible if we see the Russel as well breaking above this level of resistance. The Russel contains more risk assets. These are low cap, But most of the technology and the larger companies that have been doing really great at the moment are pending from a threat. You can see that Google is already testing the highs of 2021. This could be an amazing area for a bounce, but breaking below it, it will spell doom for most investors. I will expect a big sell-off if we close below it. Apple is printing a hive signal, most likely with a target of $200 if it plays out. Nvidia as well looks pretty ugly with 2 consecutive red weekly candles. I think having 5.5 interest rates is quite difficult to see what level of cuts will please investors. If we only get 25, that won't be necessarily enough. If we get 50, that will pass the message that the Fed are desperate, and that's also not nice. Not cutting will also be ugly. So I think the only way to push all this up is not just the cuts, but how much money is printed behind the scenes to pump once again the markets, which is obviously not a healthy thing, not even in the medium term, because it's not sustainable. But in my opinion, it's the only way to keep these markets in a rally. Guys, I'm currently hosting a position airdrop on Bybit. You trade with $100 and they give you additional $500 for free to trade on any of the coins listed in this page. Go to the top link in the description, click on it to activate it and to see the instructions. You can also use my referral link, also found in the description, to unlock up to 30,000 in rewards. And now you can use your Bybit account on my website to access all the indicators and all the perks of the Observer and VIP subscriptions 100% for free. Join my Discord server to see the instructions, and if you are not ready for that, make sure that you don't miss the strategies I publish in the public forum. See you there. Bye bye.